Welcome to the Money Vikings podcast, where we conquer financial freedom. Join Greg, Jerry, and Bob as they discuss everything investing and personal finance. The Money Vikings podcast is hosted by three dads who are doing what they can each day to burn down debt and build wealth. Learn the path to true wealth. Their podcast and website, moneyvikings.com, is a treasure trove of ideas. So without further ado, here they are, the Money Vikings.
Last quarter of 2021, and we're well into the raging 2020s. No flappers, jazz, or Great Gatsby, just pandemics, fires, hurricanes, and God knows what's next. We're here to help navigate the choppy waters in our Viking Longboats of power. Welcome to the Money Vikings podcast number 49. Bob, Jerry, are you there?
Yes, I am.
Hey, good one. Good one.
Yeah,
very nice.
You know, we're going to talk about big investing themes for what I'm calling, I hope I invented this. I hope I invent these things, but I'm calling, you know how it was the roaring 20s and it was like flapper girls and jazz, and it was like the best of times, the worst times. This is like the raging 20s. It's like fires and viruses. It's just tornadoes. No, anyway, I mean, it's not even anything to laugh about. It sucks, but it's but the point is, we have to think about ways we can strategize together. You know, this is not easy. But hey, guys, let's take a couple minutes to pat ourselves on the back for Money Vikings Premium.
Yes,
is going strong.
Yay.
Yes,
it is.
Shout out to us.
Oh my God! Shout out to our premium members. I mean, thank you very much, by the way. And we are going to work so hard. We are working hard to deliver value and investing ideas every week. Newsletter just got launched again. Bob's doing his charting. You got Jerry with the weekly options trades. You got me, Mungie Pants, telling you how to think like a millionaire. It's great stuff.
The thing I'm excited about is, as we start venturing into these new spaces, like doing the YouTube videos, and we're ironing out the kinks there, getting things cleaned up, doing like the charting, doing the options trades. But we're starting to open up the other sections, like, getting tools out for people to actually use. Coming out soon is going to be stuff for figuring out how to tackle your credit card debt and as fast as possible, how to keep your finances in a place where you can visually see it and tackle debts, quickly. Knowing your net worth, like that's the big thing. Like we've talked about this part, knowing your net value, net worth. That's, put your stuff on a sheet and track that.
We are the Batman's utility belt of Wealth Builder. Okay,
so good.
You just pull that thing out. Hey, I sent out for premium members. I sent out a credit card that's 6% back. I mean, that was a good find. Anyway, but we got a great synergy going with Gator Traders and Brian and all the others. It's great. So I don't know. I wish we had this 20 years ago. This kind of community. I would have been signing up with Brian. I would have been signing up with Money Vikings and all these other platforms and listening to what everybody's doing and trying to find my own way. So with that, we do have a special promotion. Bob, you want to talk about that for our listeners of the podcast?
Here's the big thing is that we get we have a lot of followers through Twitter, a lot of Facebook. We have the traffic that comes through the site, but then we also have the podcast listeners that have stayed with us for so long that may not be frequenting the site, or they may, but we want to make sure that people who are listening to the podcast, who are checking us out, we have a promo code. All right, these are just the people that are listening to us, that are really with us in the trenches. So the code is TMV Listen. So like the Money Vikings, TMV Listen, all caps, all one word. You enter that in, it's 30% off.
Forever.
It's 30% off. Forever.
There it is.
30% off.
Boom.
And so people understand is like that's locked in. Your premium you pay is 30% off every month. It's done. That doesn't change. So I've been encouraging people to take advantage, and it's hard because I know I'm biased here because it's our site, but this really is something that people aren't getting anywhere else. Like it's growing right now. Things are opening up. We're adding to it. We're taking, suggestions. If there's something that somebody wants to see, something needs to change, guys, we're here. You have direct access to us.
Yeah. Or if they want us to do deep dives into different areas that we specialize in, options with Jerry, me with real estate, Bob's charting, etc.
Yeah,
So
let's do it. We're here.
It's gonna be good.
It's gonna be good. And I can't wait to start getting into the credit card and the credit scores and home renovation and finding discounts. We're gonna have stuff around organization in the home. Like there's so much stuff that's gonna come out. It's gonna blow people's minds, not just Greg's.
Oh, thank
everybody
you.
else's.
Thank you for taking my catchphrase and using it. I like that.
Your catchprise.
Yeah. You're blowing my mind.
He's the only one.
Blowing my mind. Well, with that, guys, we gotta. So we gotta go to the news. Got to talk a little bit about the news.
Yeah.
The Federal Trade Commission, the FTC. This is a heavy one. This is a heavy one for the raging 20s. Okay. The FTC is investigating why the ice cream machines at McDonald's are always broken.
Dude,
they're always broken.
Money well spent. Investigation team, get on that.
Bob, there's something kind of crazy about this. This is a true story, and it's actually part of the right to repair movement because they think there's some kind of conspiracy where these things are always broken because you have to call in some specialized technician and no one knows how to fix them.
Really?
But it's that greater movement we were talking about that could really save people money over the years. We talked about this with our grandfather. His generation, they could fix anything. They had the skills, right? They had the skills. But I think there was also an ability to get into things and fix them. But there's this thing, this right to repair movement. I'm fascinated by it. But they are looking into the ice cream machines at McDonald's. So next time you want your McFlurry, Bob, you can thank the FTC. That's all I'm telling you.
Is it really ice cream at McDonald's or is it the smoothies?
Who are you, sir?
I don't know actually what technically that stuff is. I don't know what any of the food there is.
It is as real of ice cream as the chicken McNuggets are chicken. All right, sir. So
I know there's sugar and hydrogenated oil in it and some carbonation.
They're delicious.
with natural and synthetic flavors. Okay, guys, this will get your goat. Famous investor John Paulson, he made billions off of the housing bust back in the 2006, 2007 era that we all lived through. Great time to buy housing after that.
Yeah.
He said crypto will have a huge collapse someday. That's what he said. But this is what's interesting. He will not short it. He claimed it's too risky to short it. Geez. I don't know. We just bring these things up because I like to bring in, I don't like us to have a message or a show or a blog where we're just pushing what we think. Okay. Right. I think it's very important as an investor to question your own beliefs and assumptions and have them stress test. So I don't know, this guy, I don't agree with him. I think that, again, I'm a big Ethereum guy. I think Ethereum has a future. I think Bitcoin does. I think the problem, guys, is that so many of these guys, they become so binary, is what I've found lately. It's always binary. It's like it's zero or it's 10 million, and it's like maybe it's somewhere in the middle. And let me ask you this: if Bitcoin tomorrow fell to, so it's $50,000, right? Or whatever it is, 45, it doesn't matter. It's high.
51.
51.
Something.
Yeah.
Let's tomorrow, if it went down to 2,000 a coin, wouldn't you both be buying it? I would.
Oh yeah.
So that to me, you know what I'm saying? There's always a bottom where someone's going to buy it.
Yeah, but I don't think the collapse is going to happen like that either, because this always goes into a lot of the stuff that I talk about from the technical analysis side, about you have things that are just being traded by computers 24/7, and they have a set of codes and requirements that they're bound to, and they're going to trade off of. And you have people with tens of millions of hundreds of millions of dollars that are telling these robots what to do. And there's no way that they're being programmed and told that, okay, if it drops below this amount, sell everything. They're not doing that. They're going to be like, if it get, X, Y, if, X, Y, and Z matches up, buy at this volume per minute or whatever. Like, it's just not going to happen. I know we look at the total, the crypto market cap, which is the ticker is total, TOTAL. You can look at that and get an assessment of what the total market of cryptocurrency is doing. And you can use that actually to see if your crypto is going to go up or down. Now, I will tell you right now, the total crypto cap market, it is about to reach its all-time, it's about to hit the resistance point of its all-time high. It's approaching it very quickly. And if it does that, it can respect every, like what we do in the market, we see a cup and handle formation. It could respect the same formations, and we see a cup and it pulls back a little bit to the handle and then it takes off again. But yeah, sorry.
What is that?
2.4
trillion? Is that right?
Yeah, it's almost $2.4 trillion dollars right now.
I guess it's just very interesting, guys, to see this play out because, like I said, why is it so extreme, both ends? It's like, why isn't there a world? There's a world where fiat currency and Bitcoin and Ethereum and all the other ones, they all work together. It's not, you don't have to be, like the downfall of government and fiat currencies. I mean, that's not happening. Okay. Right. And then on the other extreme, I don't think Bitcoin and ETH are going to zero. People are going to use them. They're going to invest in them. They're going to, anyway, that's, I think we have a nuanced view, but like everything.
Yeah. I'm with you. I don't think it's going to zero. So
this one's for you dividend investors out there. Hey, a lot of great articles up. Put a couple up on dividends. So I'm a big dividend investor guy. So check those out, guys. I've been doing a lot on REITs and some of our favorites. So that's in premium. It's another thing in premium is you get in there and you're going to see a lot of analysis for what I really try to go into high quality. Okay, really high quality dividend payers that are producing a nice yield because you can't get that yield in a savings account. No, you're not going to get any yield. So it's a low yield world. So that's why I think the value of these dividends. But anyway, CVS is one that I've liked over the years. But apparently, if you're a CVS dividend holder, you should be pretty pissed. I'll tell you why. Organized crime rings are stealing millions of dollars worth of merchandise. I mean, like foot fungal creams, like just anything you can imagine.
Tough actin Tinactin,
Mr. Scholl's, arch support. Dude, they got great stuff at CVS. Okay, I love CVS. I'm always there. I mean, you can also go buy liquor. I love the receipts. You get the receipts. You get like that's all. It's all $20 off your next purchase of 15% off. How about some free gum? We'll throw in a pack of gum for you. So organized crime is stealing $45 billion a year from CVS. I was mad.
You should be. We should all be.
That was ridiculous. So there are security firms right now that are cracking down on this stuff. But I just couldn't believe it. The guy was like, in the article I read, the guy's like sitting in his car, the security guy they're the outfit that was hired to go after these guys. And he's like, he works for CVS, he's hired by them. Yeah. And he's like, here they go again. They're walking out with grocery bags filled with, I'm like, who walks down the aisles of CVS with their hefty bag? And like you said, it's just tough actin Tinactin, throw a couple of Cliff Bars in there.
Slim Jims.
Oh yeah, I get some Slim Jims. Oh, have you seen their candy aisle during Halloween?
Oh yeah.
Dude, we're coming up on Snickers season. This is crazy. Anyway, I don't know, guys. This is what I'm telling you. It's the raging 20s. I'm telling you, raging 20s. What's this about Atai Life Sciences, Jerry?
Yeah, this is one that's in my psychedelics holding PSY ETF.
Come on, baby, light my fire. Sorry. Okay.
This is for mental health. Come on.
Yes.
It's for serious uses.
I believe in it, actually.
Guys, this is for seriousness.
Yeah, no. There's a lot of companies on this ETF, but Atai, if I'm saying it right, is one of them. It reminds me of Atari. That's why it caught my eye. Atari 2600. But yeah, no, they got some more approvals, and they're making progress. And looks like their stock was up this week, so that is helping the PSY ETF. There's some cannabis in there as well, so check out PSY. Look at what they're holding, and it looks like the psychedelics is kind of the next wave of healthcare for mental health and other items there.
Jerry, I have read about this and I do buy into it. I think under controlled situations, I've read some very interesting articles about how soldiers with PTSD have been dramatically had their lives improved through this kind of stuff. So there's something there with the brain. So
I've seen something also where they, and it sounds probably pretty maybe weird, but schizophrenia. I saw something with psychedelics. It has to do with the disruption in the brain, and they're using psychedelics in low doses over long periods of time or longer durations of time, where it does a rewiring in a way to reverse that. So it's pretty interesting.
Good stuff.
Yeah.
Last thing in the news that I'll mention before we get into our main topic, guys, is so it was a little bit of a downer this week. Kind of interesting. Cielo, which we're tracking. We're part of the community there, which is it's a neat community. I enjoy it. I enjoy being part of it over at Penny Queen, the Cielo Waste Group, and the other ideas she has, because I think the due diligence is amazing. And they're risky, but if you've done that kind of due diligence, it's worth taking a risk, I think. But the press conference, didn't quite do what people were looking for, so stock went down. I actually added some more to my position. I still think there's something there. Again, time will tell, but it's a kind of a neat thing to follow.
Here's what I'll say this thing about Cielo, and this is I was trying to be active in a way where you kind of cool some reactiveness of people, because this is some of the stuff that we talk about is, being a good investor is also about, it's having the inverse mindset of what somebody would normally do, where you kind of accumulate on these downs to lower cost base, or to average down if you have to, or to pick up at a discount, right?
Right.
The thing that got me with this conference was, CEO didn't do a great job of maybe having a professional response to something. And it had to do with had to do with something
desulf or the flow.
It was the flow with it
gets pretty technical. A lot of it, chemical wise.
The desulf. But the thing is, it's the his response was, I'm paraphrasing, had something to do with you'll have a better chance of guessing the lotto numbers, right? But here's the reality. They had to reel back on some outflow because they were running into some problems. Now, I like seeing that a company, instead of saying, "Oh, we couldn't meet the numbers, we're going to change the whole thing now, guys. We're not really doing this." I would rather them say, "Hey, we're trying to solve for this. We've reached out to experts to see why. We have people working on it. They have also solutioned with another company that's going to they're dealing with for some other chemical component." There's actually a lot of good stuff in that call. But you had people react because Mr. Market, because people have these expectations, right? And this is another problem in human nature, is that it's these expectations. You don't hit it, then I'm giving up on you. And then you had short interest taking advantage of a situation, just like they do with many other tickers out there that we're very familiar with.
MVIS.
There's a stock called MVIS. I don't know if you guys heard about it.
I never have. I'd like you to talk about that someday.
Yeah. So, but it's the same thing. They take advantage of a situation. People always, well, not always, but a lot of people have stop losses that are just set, right? Especially when it comes down to a conference call. A lot of investors will set a stop loss, and a lot of short interest knows that. And so what they do is they intentionally short a stock to trigger those stop losses. And you will start seeing a cascading. They call it a stop loss raid. They will intentionally trigger stop losses because they know it will cause a snowball effect. It will cause an avalanche in the market. So that's another thing.
You hit the nail on the head, Bob. I think you're really hitting on a theme here too. It's managing risk and it's managing your emotions. So much of investing are managing those two things. And first thing I'd say about risk, if someone is getting so overworked and excited about one stock, I think they might have too much of their assets in it, frankly.
Right.
I mean,
Yeah,
I have
absolutely.
an amount that's good for my portfolio, and I'm taking a risk. I think it's going to pay off. If it doesn't, my life will go on. I'm not going to miss them. I'm going to be able to pay for my house and be able to pay for my life if Cielo doesn't do well. But if someone's just like, this is the one, I'm putting, 60% of my assets in it. Yeah, I'd be pretty upset. I'd be raging and, upset. But anyway, and then like you said, with the stop loss, I mean, you got to watch your entry points on everything. Yeah. I don't know, pull up some guys, you got to get premium and check out Jerry's options trades. It's the best risk management I can think of, frankly. It really is.
Seriously, Jerry,
risk management.
Yeah. You go into some of these risky trades sometimes and you have found a way to really dilute that. And even in ways where if something did go south, you've been able to pick strategies that will actually turn it to the plus, where you roll it or you bring something else in, another component that actually either reduces the loss or pushes you back into a gain situation. So
we also tell
you, man.
And Jerry and you Bob, you also tell premium members the risk assessment of the trade. You say up front if it's low risk, medium, or high.
Yeah.
So someone can decide right from the beginning if they're, how are they feeling about this? How much, how to do it. So I think it's great.
Absolutely.
Well, guys, 2020s have been off to a rocky start. Okay. I just have to tell you, I remember.
I haven't seen it yet.
I remember New Year's Eve, 2019, when we were heading into 2020, and I was pretty optimistic about the future. I was like, wow, this is amazing. The 2020s, I thought it was like flying cars and Star Trek and free food, like all the way through. I thought the whole decade. I was like, this is going to be just one continuous party. It's going to be the roaring 20s with spacesuits. Okay.
I'm just waiting for shoelaces that tie.
They have them, dude.
Back to the Future.
The Nikes came out with the self-tying shoes.
Oh, really?
Or not self-tying. It was.
Did that really work, dude? I don't know.
They had there was the thing out, and the thing, and the thing. Then the news, they showed the Nikes that they made the Back to the Future shoes that actually work. They're really expensive.
Well, let's just so I hope this changes. But at the first couple of years, I was thinking. I think because it's fall, it's starting to be fall. I mean, it's the end of summer. Last weekend of summer. Happy Labor Day, everybody.
Yes.
Last weekend of summer, I was starting to feel like the feeling of transition, and I was like, wow, it's like the 2020s have been kind of crazy so far. So I'm calling it the raging 20s at this point. But anyway, this is the point. This is the point. The world has changed, okay, as it always will, okay, and a lot of things are going on, and there's a lot of, you guys know. In college, I was an international relations major. That was one of my majors. Okay. So I loved looking at like how the world on a macro level was evolving. And so, the US is playing a different role now. We're in a multi-powered world. We're in a great competition with China, right? And others. And hopefully that competition will just stick to business and technology and innovation, I hope. Because that way, I think more people will prosper. Humanity will prosper. We don't want it to become a war because that hurts everybody. But there is a power, struggle going on, and so in light of that and other things that I see coming, a lot of us see coming. I came up with 4 what I think are going to be themes for the next decade. So the first one is, I think, pretty straightforward. It's ESG. Okay, it's sustainability. We all know that. Okay, so we just went through this tornado, like there's like forest fires like all the time, not where we live exactly, but in Northern California and the West.
Wait, was it a hurricane or tornado? I always get it mixed up.
Oh, I'm sorry. Hurricane.
Or a
Hurricane.
typhoon.
Hurricane Ida.
Yeah,
You're right. I'm sorry.
We're used to fires and earthquakes.
We're like desert people in the Southwest here, so we don't get a lot of like that's what's crazy about this right now. Like too much, like one part of our country has way too much water, and then there's our part of the country that has like no water. We're running out of water.
Yeah.
So my point is not to be. I'm not trying to say we're doomed, because I really don't believe that. I believe that we will pull through, but let's just be honest as investors. Things are changing. So we have to be, I think, ahead of the curve. And so I think one big theme is going to be ESG, and it has been for the last couple of years. I think, Jerry, ESGs have done pretty well, and that stands for environmental, social, governance companies that fit certain criteria in terms of trying to go towards renewable, trying to be socially good. So this is like the whole concept of like, blood diamonds, right? Like, my diamond stocks have been doing very well lately. It's like, well, that's really nice. You've had free labor called slaves,
Yeah.
It's like really bad stuff was resulting in those profits. So these funds and these companies are realizing that the world is more transparent. The world and investors and consumers are more concerned with renewability. And in addition to that, renewability is better for the pocketbook. I mean, it's actually better for the bottom line. And then it's also understanding that some regimes in the world are obviously very bad on human rights. So it's like governance things. But do you guys have in front of you? I mean, these have done pretty well, right? The last couple of years.
Yeah.
Mm-hmm.
I don't know any, and be honest, like I don't know really any off the top of my head. ESGs. You guys are more, I think, versed in that stuff than I am. I can look up just ESG in general as a ticker.
Yeah. So a couple of the ETFs that we flagged that I know that Jerry and I look into, but there's the Vanguard ESGV is the ticker ETF. Okay, and you can kind of look at the companies in there. There's one ticker VFTAX. There's another ticker SUSA. That one's an iShares. I mean, there's a bunch of these. There's iClean. It's ICLN.
I'll tell you, here's the thing is that I'm just cycling through these real quick and looking at them. Just observation. One, they appear to be all showing the same exact trend. Like they all look exactly the same. And then two, their trend looks almost exactly the same as the SPY. So
interesting.
I don't know that. And so, my other thing I would say then, if that is the case, if there's a correlation here, I know correlation, causation. Okay, I get it. But if there is a correlation, and if the SPY crashes, does this have to do with their portfolios being heavily weighted on what the SPY's composition is? So if the SPY crashes, we're going to see a very similar crash or correction in these ESGs as well.
Yeah, I'm just looking at the Vanguard FTSE Social Index. That's VFTAX. They have, the top funds in there are just like SPY, Apple, Microsoft, Amazon, Facebook, Google, Tesla, NVIDIA, Visa, JP Morgan. So they're very close to those.
Yeah.
But they probably only make it into this kind of fund if they meet some criteria. And I think Kathy Wood is also starting a new ESG fund or a transparency fund. Did you hear about that?
What?
Greg?
News to me, Jerry.
Okay.
Wow. Breaking news on Kathy. I thought I knew everything at every moment. she calls me every Sunday.
I know, seriously.
And
seriously.
Wow. That is so cool. I did not know that. That's very interesting. Well, I don't know, guys. It's a theme, right? Mm-hmm. So I'm not saying it's necessarily the best thing to do right at the moment. We all know the market is pretty highly valued as a whole at the moment, and we're searching out value plays and what we think are things that are discounted. But the market's pretty assets are pretty well valued in and then don't take it from us. That's what Warren Buffett's saying. I mean, the Buffett indicator is like flashing red alert.
Yes.
It really is. The Buffett indicator is saying that the market has got too hot.
The canary in the coal mine died like 4 months ago, by the way. Just so everybody knows. Just so you guys know, they're. I think we're like 2 or 3 canaries deep now.
Oh wow!
So it's yeah. I will say is I did actually a little quick technical analysis that was free. I put it up on YouTube for people to look at the SPY. What I'm seeing. What's interesting is this, and I may have talked about this before on one of the shows, is that the SPY has this 1 month cycle that lands in the middle of the month every month. And I've been able to track it back for the past like 4 or 5 months where it you see a correction take place. And the low of the prior correction to the new low of the next correction, it's like a 2.5% difference. It goes up like 1 point every time. And so I measured it back out again, and we're looking around the 14th of this month. I think, where we're going to see the next one kind of stagger in.
Pullback. A correction is defined by 10% drop or more.
Pullback. You're right. Yes, a pullback.
Pullback. So not 10%, maybe 5%.
No, not 10%. So we're looking.
Not be surprised.
Yeah.
So I don't know. For folks doing the long-term game, it's really nothing to worry about. Just dollar cost average, right? But I don't know. Make sure the portfolio is resilient. I mean, the overall portfolio construction is important, and that's why I like these big themes, because if you can catch these big waves over a number of years, you could kind of add to your returns. So the second one, I think we've touched on it in other shows and on the blog, but emerging markets. Okay, they had a bad decade, but I think that could change. I think at the end of the day, guys, people around the world want a higher quality of life. I mean, look at the images that we're seeing from Afghanistan. Okay, there's a lot of people in the world that want a higher quality of life, and people will continue as humanity will to push and strive for such. I think it's the nature of change and evolution, frankly. And developing nations that build strong institutions, personal property rights, balanced systems, not perfect, but balanced systems, I think, that have an element of capitalism and free markets, I think they're going to build on success, And so again, it can be more of a risk area, but it can probably be more of a reward as well. I know a lot of us are following closely what's happening in China, and the China debate is so interesting too, because it's reminding me lately of what you hear about crypto. I can read one guy that says, China's the worst thing ever. We got to, don't invest. It's really bad. And Cathie Wood is pouring hundreds of millions into Chinese tech, seeing it as a buying opportunity, and seeing that this too will pass. And these are great companies with huge markets and huge customer bases. Yeah. You guys saw my PDD, Penduoduo. I don't even know how to say.
Pinduoduo.
Penduoduo. Yeah, PDD.
This is so awesome.
So anyway,
P Diddy. Okay.
Sorry, we need to learn some Chinese here.
Yeah.
PDD is very fascinating, guys. This company just surpassed Alibaba in sales, and the reason is this: it's a platform that connects farmers and agriculture to buyers, and everybody has to eat. Agriculture is huge, and so you can imagine anything that can make that more efficient is going to be huge, and it already is. So it's going to be huge. That's my new.
It's going to be huge.
It's going to be huge. Okay, I don't even know if it's going to be huge.
So on EEM, I mean, I think So it has had kind of a bad decade, but it is generally on an uptrend. And more recently, I think the reason it's been going down is because of the Chinese influence, and Chinese companies and tech sector there has been coming down. But it does look like over the last month or so, it is starting to pick up again. So I hold some EEM in my portfolio. I think there's an iShares version of EEM also that has a lower expense ratio, so you can look for that. And I think that's why I think Cathie's adding because it's down, and I think China is going to bounce back up at some point in the future if it hasn't already. And that's going to help EEM because they have a lot of exposure to China. You can get non-Chinese emerging market stocks or ETFs as well too. I think Greg, you had mentioned a few.
So that's the theory, guys. I think it'll be another theme for the Raging 20s as the world continues to change. Okay, I won't go too much into detail on the third one because we did a whole show on it last time, but I think it had to be mentioned again. So I really believe that in the 2020s, given what we saw with Moderna and mRNA and the pandemic, breakthrough biotech is going to have a great decade. I just think it is because we're on the cusp of a biotech revolution that is combining artificial intelligence with, machine learning combined with new discoveries about how proteins fold and CRISPR. This stuff is so amazing to read about just as a layman. Just read about it. And it's like a sci-fi novel, what they're understanding about our genetics and our biology. But anyway, I also think it's exciting because you're imagining a future where intractable diseases can be cured or at least mitigated. Personalized medicine, genome engineering, genetic engineering. Mm-hmm. But you guys know, the other big thing is that costs are getting driven down for personalized medicine. And Bob, you work in healthcare, so you're hearing a lot about this. Yeah. There's a lot of options. My go-to is, Kathy Wood's Arc Genomics. That's my go-to. Mm-hmm. Love reading about the holdings. I love adding to the positions in that. But anyway, it's a simple, I think it's
well, Bob and I took this. We looked at ArcG, your kind of macro recommendation of genomics from last week. Yeah. And Bob looked at the charts. I looked at some of the options strategies out there, and we did put out a premium bull call spread, debit spread for our premium members, and that is up 25% right now.
Look at that. If somebody premium guys, 25% gain.
Well, I mean, the thing is what we're doing, and for people to understand, is that the stuff that we're setting up, if they were so inclined to do it, you just in those little things, you pay for your membership. It's nothing.
Yeah, and some.
And then some. And that's just, you can do that off of one trade, one play, but we
and then there's weekly ideas coming out.
Weekly ideas. We have some that come out every day or every couple
Not
days.
Investing advice. No, just what we're doing. We're just showing you what we're doing.
Yeah.
Take it or leave it.
Take it or leave it. We're showing you what we're doing.
Getting into just one of these plays, and we're not talking about if you wanted to open up 5 or 6 of these positions. Just one of them will cover your monthly cost. And then some.
It's an exciting time with investing, actually, for the retail investor. Seriously, because we are really joining forces here. Yeah. So, speaking of forces, space, the final frontier.
Yeah.
Space, the final frontier, guys, joining Space Force. Here's my fourth theme for the raging 2020s. We are in the middle of a great power competition on planet Earth. We all know that. Do not be fooled to believe that the competition stops within Earth's atmosphere. Okay. Are you guys ready for my catchphrase? I'm about to blow your minds.
Yes.
Are you ready to have your mind blown on our show?
Yes.
We need sound effects added. Okay.
We should.
China is planning on building a massive... Okay, here's the deal. At the moment, they have their own space station. Not many people even know that. They have their own space station that they didn't invite anybody else to the party. Okay. And they're building a massive, ultra-large spaceship that's going to be like a mile long. I'm not making this up.
Wow.
I'm not making this up. I wish this sounds like science fiction, does it not? It sounds like the beginning of a novel. The great power was building the Death Star. They are building a mile-long ship. So my point is this, guys, we have to invest in space. You have to invest in space. It's so by the year 2040, the space industry is targeted to generate over $1 trillion a year in revenue by 2040. That's not that far away, really.
It's not.
It's already generating tons of, you guys, for years, you and I, we've all been talking about SpaceX and our man Elon. But the point being, the U.S. and allies and every other country, they've got to rival. They have to go build this. It's got to happen. It's going to happen. It's happening. Satellites are going up. So again, I mean, I do ArcX. Okay, you guys know that ARC Space ETF. But there's others. They have the greatest tickers in the world. One is UFO.
Oh, it's amazing.
So cool.
So
Another one is
just
Moon.
The ticker alone.
Dude, the other ticker's Moon, Bob.
Moon?
Moon.
Yeah.
MOON.
Dogecoin's going to be on that too.
That's what we hear. Yeah. But anyway, so it's just very interesting. And again, check out what's in these funds. That's even more fascinating. Okay. ArcX has deer. Okay. And it's because the company's automation and technology depth is increasingly growing, and its ties to space include drones and weather satellites, bringing improvements to the farming process from space.
That's amazing.
Yeah, it's amazing.
Who would have thought deer?
Deer in
space.
Deer in space.
Santa, dude. Seriously, bro, who are you? Come at me. Santa flies in space all the time with a reindeer.
Not in space.
That he does. Sometimes
low
orbit. Yeah.
Sometimes you have to hit zero G gravity to actually manipulate
to go
time,
that fast to do that many
time.
Yeah. Presence.
Seriously.
That's true. Yeah. He's magic. It's magical.
It's magic.
Hey, so those are the investing themes, I think, for the Raging 20. There's others. We'll talk about them later. There's others, of course. But here's the thing I'll end with, guys. This is definitely a time, I think, at the moment to build resiliency. So when times are going really well, your employment is up, your stocks are up, your assets are up. I think it's time to build resiliency, because you just don't know what's around the corner in the Raging 20s. That's what we've been shown here. Yeah. So I would prioritize savings, pay yourself first. I would beat down debt, and always think assets over liabilities. So those are a couple of little nuggets I'll give you guys, which I know you guys are doing.
Nice.
There you go, guys. That's it. I don't know. I hope I blew your minds.
Yeah, you did. I love the mile-long spaceship. It's amazing.
That actually is bonkers.
It really is.
Frankly, that's bonkers. Check it out. Jerry, tell us about trade ideas for next week, and are we still bullish?
So we have a new section on this show now that we're going to be doing. It's called "Are We Still Bullish?" The idea.
This is new to me, so
is for stocks that Bob has recommended.
What?
That
why am I called out here? Okay,
shoot, Bob.
Oh, geez.
Yeah, okay. No, I mean, you guys call out a lot of stocks, and I'm very interested in them, and I do as much due diligence as I can. But at the end of the day, I don't have time to go deep into all of them. So there are some that I've picked up. I've been on many different Discord chat groups and internet clubs where we talk about stocks and whatnot. And so some of them that I still have in my portfolio, maybe I am guilty of not setting a stop loss when I should have. But I do tend to have this laundry list now that's building of stocks that I'm not sure if I should continue to hold or maybe cut them and do some tax loss harvesting and preparation for the end of the year. One of them is you're going to say something?
Well, I'm nervous. What am I
Calm
doing?
down.
Is something going on?
Let the man speak, Bob.
Okay.
Calm down and let the man speak.
Okay.
No, I just want to make sure, because these get mentioned and then we get excited and we pick up some shares, and then they don't get talked about for a while.
All right.
And it's like, should we still be in them, or are we hoping for another push? Like, tell me about Ring Energy. What are your thoughts on that one?
Oh, okay. So we're just doing a little chart.
Yeah. And there's a new one, MVIS, that you're gonna.
Yeah, I'd like to hear about that.
I've never heard about this.
Okay, sorry. It's Dave's time. Ring Energy.
Ring Energy.
Who's Dave?
Who?
I'm sorry. Dave's our mascot for the Money Vikings. Jerry's time.
All right. So, Ring Energy. So, Ring Energy, we're still bullish. It's testing a resistance point. We're going to possibly see a slight little pullback, and then we'll retest it again.
Beautiful. Thank you. So I will leave that one on. How about Rail?
Rail. Man,
this is the lightning round.
We're doing lightning round on this?
We're doing lightning round.
Come on, Bob.
Faster, Bob.
Okay.
Sweat. You're sweating, man. Sweating.
This is going to be the heat, dude. This is crazy. Okay. Rail.
You could just say buy, hold, sell.
Oh, geez. Okay, so... But that's tough, because if somebody hasn't bought in yet.
Or just say pass. Say pass if you don't know. Don't make things up.
Okay, so Rail is keeps testing a support. on a down wedge. It looks like it could be flagging out. That would be a hold. So we're neutral right now. It doesn't have anything showing a breakdown of the channel. So we're going to hold on that one. It's neutral. It is more on a bearish sentiment, but it's not breaking down below a support.
Okay. Yeah, I've been selling covered calls against it, so I've been
Nice.
just collecting premium while I'm
There you
waiting
go.
here. Yeah. UAVS.
Okay, UAVS. Okay. UAVS. Okay. UAVS is actually bearish right now. So that one looks like it's hit a resistance on the TWAP, and it's going to roll over into this downward channel. Sentiment's bearish, and yeah, so it's looking actually bearish. I would need this to show some uptrend to break through some resistance at around like $4.50 before I would buy in.
Okay. Last one, GSAT.
Okay, GSAT. Bullish on GSAT actually. That's looking really good. There'll probably be a small pullback just from a technical standpoint. But it's gapping away from some support. So we'll see pullback to that, but we should see actually it continue to go up. The testing is going to be really around $3 to see if it breaks through $3.
Okay. All right. Well, I hope it does. I've got some options in it until the end of the year.
Yeah.
Jerry, I love that.
Get me nervous, man. That was good.
That was so cool. That was so cool.
Okay.
Yeah. Good job, Jerry. That was awesome.
That wasn't so bad.
I got one more, Bob. I got to do it.
One more? Okay, what?
Ethereum. Do ETH.
Okay.
ETH.
Not Ethan Allen, the furniture store.
Ethan Allen?
Not that one.
Dang
No,
it.
Ethereum. Thinking.
Okay. Ethereum. Okay. So Ethereum is it's going to be approaching.
It's trying to go to 4K right now.
Yeah, it's going to be.
It's going up like $1 a minute at the moment.
Yeah, it's going to be testing its high. I will say that I am bullish on it, but we will have a pullback here soon. I think just from a technical perspective.
It's got to be. It's on rocket fuel right now.
It is. So we will see a pullback at here very soon, probably in the next couple of days, as we approach retesting all-time highs. So as we start getting around 4,200-ish, we're going to be very quickly because the all-time high was what 43.72 was the all-time high. So, but around 4,200, there's we've repeatedly tested that in the past. So I think we're going to repeatedly test that again before breaking through it. Well, if there's not enough behind it, it's going to collapse.
The supply of ETH is going down as we speak. Over 200,000 has been burned so far.
Which I think
reducing the supply
will actually help with rocket fuel.
That's amazing. Yeah. So very, very much becoming more competitive with Bitcoin. Great show today, guys. Awesome. I want to wrap up with something about gratitude. Wealth in a lot of ways is about gratitude. There's a lot of crazy things going out there. I've been praying for the folks in Louisiana lately and hoping that they can get their lives rebuilt. And especially, Brian and the Gator community and all that. But we need to we need to have gratitude. That is true wealth. And I read this thing that reminded me of that. This was from a mom who had kids, but she wrote things that a lot of us would complain about. But she wrote the gratitude part of it that it equals. And so I'll read 4 of them to you with the end of the show here. So early wake ups, she said that equals children to love. Okay. Yep. A house to clean equals a place to call home. Okay. Laundry means you have clothes on your back, and dishes to wash means you have food to enjoy and sustain you. So I'll leave you with that, guys. I love you all. Have a great week. Join Money Vikings Premium. It's great.